Welcome back to Investing with Confidence. I am your host, Joshua David, and we are having a good time talking about the financial markets, especially the stock market. We're also going to talk about options, futures, and Forex, which are leveraged asset classes, but also some of those might be open 24 hours a day. Also, don't forget to subscribe to the podcast wherever you listen to podcasts, but also check out the Investing with Confidence YouTube show. So, Al, as we get into this next topic, and I mentioned earlier about the leveraged asset classes.
Sure.
Now, we talk a lot about the stock market because everybody knows about the stock market. Everybody knows what it is. It's stocks. It's pretty simple, right?
Mm-hmm.
Now, there's other, assets that we're seeing a lot of people want to understand and know more about in their trading accounts, but also in their retirement accounts. So let's talk about some of those other assets that the smart money uses to create income.
Sure. And there's really two primary components to any kind of a trading or investing plan. And by the way, we'll talk more about a plan and how important that is. But the first part is the framework, the basic core foundation strategy that you're going to use, regardless of what you trade, regardless of what your time is, whether you're trading on a daily or weekly basis, or maybe you're only making one or two investments a year. And that's that. In fact, Warren Buffett even said this. He said you need to have a sound framework for making decisions, and then the ability to keep your emotions from corroding that framework. We do that by having a set of rules that our students follow. But that's kind of the core part of it. That is really what's going to help you identify where the imbalance between the supply and demand between the buyers and sellers happen. The second part are the assets that you use, because it's important to understand that there are different assets and different strategies that you use for short-term income and for long-term building of your wealth. And we at the Online Trading Academy, we teach strategies that help you achieve that short-term income goal, and then also strategies for your long-term wealth goals.
So it's basically strategies that are designed to teach you that we're an education facility.
Well, exactly, yeah. And as such, we want to help put the odds in your favor, the probabilities in your favor, again, by understanding what the different assets that are available for you to use, like when they should be used, who can use them, and why are the institutions, why are the big Wall Street firms using things that are different than what they put their clients into? We talk about this pretty much every week, Josh, where most people are put into a long-term strategy. It's a buy and hold strategy where a portfolio is put together, and then you're told to basically just hold on to that through corrections, through crashes, hold on to it for decades, and you'll probably be okay.
Hope you're there, right?
Yeah, and hope that you are okay.
Is hope a good strategy in your opinion?
Hoping, guessing, and praying are not good strategies. I'm not telling people not to pray, but hoping and guessing should not be part of an investment or a trading strategy. Mm-hmm. And again, understand that there are different assets that are used for short-term and for long-term. Most people are put into a portfolio type that really relies on the long-term strategies, and that's typically a stock portfolio. For a lot of people, it's a mutual fund portfolio. That doesn't include things like futures, Forex, and options. Those are assets that the brokerage firms, the hedge funds, the pros out there are using on a regular basis, and they use them because they understand that gives them the best opportunity to maximize the value of their investment dollars.
Yeah, you kind of made me think about something. I know I want you to explain what those assets are, but you talked a little bit about different trading styles.
Sure.
So just kind of clarify the difference between them, because our sponsor, Online Trading Academy, teaches strategies that are designed to teach you to trade any style that fits you the best. So explain what those different strategies are. There's really three.
Yeah, and that really is, I think, one of the advantages with the Online Trading Academy. It doesn't make any difference what your style is, what your goals or your expectations are. The education is there, and it really is customized for each person. But the three that you're talking about, you can be a day trader where you are buying and selling the same asset during a day, and if you do that 3 or more times in a 5-day period, you're automatically considered a day trader. The brokerage firms have no control over that. That is the way it is.
That's with the stock market.
That is with the stock market. Exactly. So that's very short-term trading for people that might be looking at daily or weekly income. Futures is a great way of doing that. And actually that day trading rule that I mentioned with stock doesn't apply with futures. That's one of the advantages
Yeah.
of using futures.
Good point.
Yeah, and that day trading rule means if you are a stock day trader, you have to have a minimum of $25,000 in your account at all times. If it goes below that, you have to add more money or you can't trade for a period of
And
time.
that's not required with the futures market.
It's not required with the futures market. So if you want to be a day trader, futures is a great asset to use.
What's that midterm style trading?
That is basically a swing trader,
Okay.
and that can be a few days, a few weeks. That's maybe you're a little more passive in the investments that you have. And then there's a long-term investor, a position trader. That may be somebody who's only making a trade or investment once or twice a year.
Or once or twice a month even. And that the strategy is different for everybody.
Yeah, and it doesn't make any difference what the time frame is.
Mhm.
It doesn't make any difference what the asset is you're trading. That foundational strategy, the core strategy that you're using to identify where to enter and exit based on that relationship between buyers and sellers, it's the same for every asset. But then you want to make sure you have access to education if futures is the right one for you, or Forex, the foreign exchange market, or options. And our students have access to not only initial education, but ongoing education, ongoing guidance in all of those assets.
Yeah, we're seeing a lot of people that come to Online Trading Academy. They want to understand the different styles of trading based on their schedule. Because if you have, say you're really busy, you may not want to be a short-term trader. You might want to be a more passive, like Al's talking about, with like a swing trader or a position trader. There's strategies and techniques designed for that. Maybe you do want to be that shorter term trader, but you want to be in the proper asset. But the great thing, and Al made a good point, the core strategy is designed to teach you to make investing decisions based on your strategy. So Al, there's now our listeners understand there's different styles of trading and investing.
Mm-hmm.
You have short term, let's just call it simple: short term, midterm, and long term. Now, once our investor or trader figures out kind of what style they want to do based on their time, their schedule, their capital, and everything, you want to be in the proper asset for that.
Correct.
Right? You mentioned earlier the stock market is probably the least opportunistic,
right?
Because you have different restrictions. Now, talk about the futures market, the Forex market, why these are so phenomenal for people, especially like the institutions when they're creating income. But these techniques and these assets are also available to the public as well.
They are. It's just that the education hasn't been there for people. The information that you have probably is based more on stock or mutual funds. Those are the assets that people know about. When we have classes, we typically ask people what their experience has been. And by the way, most of the people that come into these classes have no experience, which is a good thing.
That's a good thing, actually.
It is. And the people that do have experience, it's almost exclusively in stock or mutual funds. It seems kind of strange then that the institutions, the big players, the smart money out there, they're not using mutual funds. And they certainly do get involved in the stock market, but they're using these other assets. The futures market, for example, where you have a number of different choices, you're actually looking at what something is going to be worth in the future. Will it be worth more in the future? Will it be worth less in the future? And that includes assets like the stock markets, all of the major stock markets, commodities, gold, silver, the precious metals, oil, currencies, interest rates, a lot of different things there that allow you to have a truly diversified portfolio. It uses leverage, as does the foreign exchange market and the options market. But that leverage allows you to actually participate in a larger investment with a smaller upfront cost to you. So you're actually you're maximizing the value of your investment very much like you would with a mortgage on a home. A down payment, maybe a $20,000 down payment, will have you control a $200,000 or $300,000 home. That's leverage that most people are familiar with. You can do the same thing in these financial markets. Futures is one way to do it. Futures is a very short-term trading vehicle. That's why a lot of people that want to day trade or need short-term extra cash, will use the futures market.
Or if you want to swing trade it, a lot of futures traders like to swing trade the midterm as well.
Sure, absolutely.
There's the strategies are really designed for any style, and that's why it's great about especially the futures market is you can pick that.
Yes.
And now, explain more about the Forex market.
Yeah, the Forex market, that's the foreign exchange market, and that's where you're looking at the difference in exchange rates between two different currencies traded as a pair. And by the way, futures and Forex both trade pretty much 24 hours a day. Forex 24 hours, futures 23 hours and 45 minutes.
How is that possible?
Well, it's you're basically you're participating in the global markets. The markets around the world don't close when our market closes. So there's a lot of opportunities there to have more investment choices. Also, you have a better chance of managing your portfolio because those markets essentially don't close except for over the weekend. Both have leverage in the foreign exchange market. You look at about a 50-to-1 leverage. That's a great combination. Fantastic leverage, huge liquidity. It's the biggest market in the world. The foreign exchange market trades more per day than all of the stock markets combined, over $5 trillion a day.
Is that with a T?
That's T, and that's per day. That's a lot of money. That means that you should never have a problem finding someone to take the other side of a trade for you.
Yeah, and to clarify that as well, you don't have to search for that seller for your buyer.
No,
the computers and the platforms, they do that for you. It's all technology. It's all done for you.
Yeah, basically, it's pushing a button. When you push that button, everything is done for you. The trading platforms do their work. You don't have to do anything other than decide which asset you want to trade. But then once you decide which asset you're trading, you know the asset, you know the strategy that's right for you. Then the important thing is to know how to buy it wholesale and sell it retail. It's the same thing you do in your everyday life. You want to buy things when they're on sale. You want to sell things, at a higher price. And unfortunately, for us as human beings, we do exactly the opposite of what we should do. Because typically, when something is on sale in the markets, in the financial markets, it has gone down. It's lost some value. That's when the fear takes over. But that's when all the big players are getting ready to buy. So it is kind of, and we mentioned before that if you don't have any experience, that's good, because we're going to teach you to do something that might be a little counterintuitive to what your gut or your brain is telling you.
Yeah, it's almost like that quote, or Uncle Warren quote, to be fearful when others are greedy, be greedy when others are fearful. But that's the crazy thing when your people are investing in trading, they're taught to do it the wrong way. They're taught to wait until price gets better, wait until price goes up, and then buy more, right?
Exactly.
Would you ever go to Target and buy, let's just say, a loaf of bread? Or you say you're going shopping for a loaf of bread, and you see it for $3. I don't even know what a loaf of bread costs. It's kind of sad, but let's just say it's $3.
Let's go with $3.
Would you say, you know what? I'm going to wait until that loaf of bread goes to $4, and then I'm going to buy 2 or 3 of them. Nobody would do that in their everyday life,
sure,
but people do that in their trading and investing. That's why you have to understand how the markets really work, but how to buy at wholesale and then sell at a retail, just like the financial institutions do. Now, we've been talking a little bit about leverage, right? Mm-hmm. So a lot of our listeners are probably wondering, okay, well, leverage, that seems a little bit scary, right? Sure. Well, it shouldn't be, because there are ways to protect what your investments are doing. There's ways to do that. So in the next segment, I want to talk more about protecting yourself, how to place entry points and exit points all at the same time. We'll be right back.